Good evening. This is Tom Alexander. It is Saturday, early evening, March 12th. It's about 6:45 p.m. Eastern Time in the U.S. And this is the review of the written report all of you have received. If you haven't received it, you want to receive it, if you're not on my list, just send me an email to tom@alexandertrading.com. Request to be put on the list. You'll be put on the list. Also, if you do me a favor, if you would subscribe to the video, subscribe to notifications, be a big help. And if you find value in the video, if you'd like it, that would be very kind as well. Thank you. Okay, there's a lot going on, a lot to discuss. Next week, seems like I have said this in every weekly report for about the past 5 or 6 weeks. Next week's going to be really important. Shocker, right? I think things are sort of coming to a head. I think the market has painted itself into a corner from where it is going to move sharply from an auction market perspective, and we'll talk more about that in just a minute. On Friday, all 4 of the U.S. primary trading indices closed on their lows. That's certainly a negative. We have this exogenous overhang of this ongoing situation in Ukraine that is unpredictable and volatile, and the market is mirroring that unpredictability and that volatility. This is the most volatile market for the most extended period of time we've had in, well, at least since March 2020. The market is behaving in a bear market manner. Now, corrective legs within bull markets will behave like bear markets, and we're relatively time and price wise we are still relatively close from the highs, both in terms of time and price. So I don't know if we're in a bull market or a bear market or this is correction, but quite frankly, from a trading perspective, it really doesn't matter. This volatility and this uncertainty, these wide ranges we're seeing, the straight up and down every day, and then market will go straight up for 2 hours and then close on its lows, or vice versa. That's a sign of an uncertain market. It's a sign that market participants are unsure of what is value. So there's this constant probing. The market is very nervous. Anything that news-wise that comes out is reacted to violently, up or down. So this is a situation, and then on the other hand, we really haven't had that capitulation type event where you get extreme readings technically, and we'll be talking about that in just a few minutes as well. So, we're sort of in the twilight zone where there are conditions in place that would be conducive to an extremely sharp rally, but there are also conditions in place that are conducive to an extremely sharp decline. So let's take a look at what I'm talking about. And let me get rid of some of this. The levels that you want to be paying attention to in the cash session are in the report, and it's basically Friday's high now, and then the respective lows, February 24th lows. If all 4 of the indices were to suddenly show some strength, and all 4 close above Friday session highs, that would be an initial signal of a potentially important low in place. On the other hand, if all 4 close below 41.16, then we may be in the early stages of a capitulation event. Now, these capitulation events typically don't last very long. They can move very, very sharply and go a long way in a short period of time, but they're usually over in 3 to 5 trading days on the outside. But you can see a market down 10% in 3 or 4 days very quickly in a capitulation type of event. Now, there are 2 other things overhanging. By the way, let me show these charts, which I'm not doing. Apologies. Here we go. Okay, so here's the SPX. Here's the upper key reference area, which happens to be Friday's high. This is the February 24th low in the SPX. Now, if you follow my work and you are versed in market profile / more importantly, auction market concepts, this is a balance area that is formed here. And it's a balance area that is perched just on top of a larger degree key reference area, which is this spike low. So if you've read my book or taken my courses, this is the proverbial perfect auction market trade setup, because you're almost certainly going to get an extremely sharp move away from this area. And the key is going to be the initial trade above or below this balance area. And this happens to be, we'll take a look at each of the indices, but this is a very classic balance area situation. Below this level, you're in guessing land. You know, I'm not one that uses magic numbers to determine support. I don't use fib stuff, LA wave counts, and all this other stuff. If we get below here, actually below 4,300, that's a level I've been talking about for weeks. The fact that we continue now, we have spent time below this level is very bearish in my mind. And you need a close above Friday's high to at least neutralize that in the short term. So what is open down here is an awful lot of real estate. I mean, the rally off the 2020 low was so extraordinarily vertical that there's a whole lot of range that can be explored here. I'm not going to go through the exercise of giving you 17 levels below here where the market might stop. I think that if the market does go into a capitulation phase and it's down 2, 3, 4 days in a row, we will be better served looking at the internal situation, specifically breadth, average true range, VIX, all of those things, to get an idea about whether or not the market might be close to bottoming, rather than give you 700 fib levels down between here and wherever. All the indices are in the same relative position. Let's look at the NDX. Now, the NDX has a less well-defined, really doesn't have a balance area. It's a very two-sided trade in here, but it closed on its low on Friday. And Friday's close in the NDX made a new yearly close. That's bearish. I mean, this is a wide range day and it's bearish. Now, once again, if all 4 of the indices close above Friday's high, then that puts things, gives a more bullish possibility, some traction. Okay, but if the NDX trades below this level in here, we're sort of guessing where it stops. Let's look at the Dow, and then we'll take a look at the Russell. The Dow is like the ES. It is in a balance area, pretty well defined. You have a lot of overlapping prices. Yeah, prices overlapping for the past 5 trade days. That's a balance area. Now, you do have selling tails up here. You do have this one buying tail, but you have a concentration of trading in a narrow range over the past 5 days. That's a balance area. But you can see where the Dow is very close to lows and closes of importance just below where it closed on Friday. And then the Russell has been holding up relatively well so far. You can see it is in a larger degree balance area in here. And if I were to show a profile chart, this would probably be the high volume node right here. But again, if the Russell and all 4 of the indices were to close above Friday session highs, there would be more bullish possibilities that would increase in probability than based on the closes that we see on Friday. Okay, and then I'll show you the profile view of the S&P. I'm not going to go through all of them. Now, this is the March contract, and as I put in the report, if you follow the report, a week ago I said one thing was certain, was almost certain, was that you were going to get range expansion. Well, we're expanding the range below the level that we saw in that report a week ago, and I have 2 different scenarios one a more bearish bent and one a more bullish bent that's in the report, you can take a look at that. Okay, let's look at a couple of technical things here. We'll look at two things. I put this in the report last week and mentioned that we have been in a state of elevated VIX and elevated average true range for 6 weeks. And that on Wednesday, it would equal the amount of time that we were in this elevated state before we really cross back below what are relatively high extremes. And that's where we are, but we're still elevated. I think the important takeaway from this chart is that this is another piece of evidence that something has to soon give. I think we're on the cusp of a very sharp move. If the market rallies sharply, your average true range within a day or two will come in very sharply, and certainly VIX will as well. On the other hand, I think you can see, extreme is a relative term. And while it has been elevated and more elevated than any time since the March 20 decline, March-April 2020 decline, it's not near extremes that we have seen in the past. So for this reason, I think that next week may be the denouement of what we've been looking for the past 4, 5, 6 weeks. So there are a lot of possibilities as to how this thing can play out. We may get that capitulation event. And, one thing that I will caution you, and this is almost a note to self, it's very easy to get caught up in narratives. We have not only the conflict in the Ukraine, we have the FOMC meeting on Wednesday. We have a very large option expiration, quarterly expiration on Friday. And those option expirations have been increasingly a part of what moves the market to and fro between levels. Now, a word about that. That's sort of, in a way, I realize the incredible notional value of options, but if institutions decide that they need to reposition, those levels will get run over in a nanosecond, the gamma levels. But I don't want to get too deep in the weeds with that right now, but there is a big expiration that will most certainly have an effect on the market, as the FOMC meeting will most certainly have an effect on the market. It's the big debate. Are they going to raise 25 basis points, 50 basis points? If they do one or the other, what are they going to say? What are they going to do next? So the market, I'd be shocked. Two things. I'd be shocked if we don't see volatile markets through next week. But I would be a little bit shocked if we see a strong trend that is sustained before, at a minimum, Wednesday afternoon when the FOMC meeting comes out. You guys have a most wonderful remaining weekend, and I will most probably be doing another update for public consumption during the week if things break one way or the other. By the way, I do a daily service. If you're interested in that, check it out on the website. If you have questions about anything, feel free to email me. I'm also happy to chat with you. Just send me an email and we'll set up a convenient time. Have a good weekend.